Welcome to the third edition of my Technical Tuesday videos. I'm Jason Sen. We're going to look at Bollinger Bands this week. Bollinger Bands was something that I used to have on all my charts, and then I stopped using them. I think that reason was because markets were having strong directional trends, and I found them not to be very useful. But more recently, commodity markets and forex markets have got some quite good sideways trends. I say good, I don't like sideways trends, but they do. Bollinger Bands are more useful in sideways trends, I tend to find. So let's have a look at them. So Bollinger Bands are volatility bands which appear above and below a moving average. I think the moving average is usually a 20 period, based on a standard deviation which changes as volatility increases and decreases. The outer bands are usually set 2 standard deviations above and below the middle band, and they will automatically widen as volatility increases, obviously, and then narrow as volatility decreases. So I've used a recent gold chart here. This is an up-to-date gold chart, and you can see there's been a lot of sideways action, and so they are more useful. As we were trending up, not so useful really. You wouldn't have been selling. Well, if you wanted to sell, I suppose, up here, that would have been quite a helpful indicator as we reached the upper Bollinger Band and the 200-day moving average. That gave you a good indication when with two indicators showing that we were hitting resistance levels. Then we dipped back, and again the Bollinger Band did hold the move. So you can see that, especially as we start moving sideways, the Bollinger Bands are a little bit more reliable as we hit the upper and the lower bands. In a sideways moving market, at least, I wouldn't say in a market that's trending strongly upwards or downwards, but in a sideways moving market, a move originating after the rejection of one band often tends to go all the way to the other band, the other end, the band at the other side of the middle. So that does seem to be the case here. The gold is proving that point is there, especially as we're moving sideways. As you can see, bang, bang, bang. We are hitting eventually these lower support bands here, and eventually we bounce back up to the upper band. We hug it all the way to the top and down again. So no good for timing whatsoever. Just because we've hit the upper band doesn't mean it's immediately going to reverse and hit the bottom band. But if it does start to move away, then there is a decent chance it will eventually hit the lower band. And again, if it bounces off there, there's a decent chance we will hit the upper band, as long as we are in a mostly sideways trending market. So here's the dollar yen since the beginning of the year, January 2017, up until where we are now, October the 23rd. Again, a market that has been moving mostly sideways, and you can see the Bollinger Bands have actually done a better job here in the dollar yen than probably they did in gold. This is where we start to see a directional move, not quite so useful. The Bollinger Bands certainly didn't hold in this April low here. We blitzed a little bit below for a couple of days, 3 or 4 days in fact, before eventually bouncing. But when we did hit the upper band in the beginning of May, that worked quite nicely. In fact, we rejected it and came back down quickly to the lower band. Anyway, you can see for yourself, Bollinger Bands have worked well as support and resistance levels most of the time. This is a chart of the DAX future, and as you can see, although we have been in a bull trend, there's been a lot of sideways action at times. And again, the Bollinger Bands have been relatively useful, not quite as good as example as the dollar yen, but it does show that even in trending markets, they can have some significance. And of course, in an upward trending market, you're looking to buy down at support, so it would be more significant when you're trying to find an entry point on any correction. And again, the Bollinger Bands here have been a fairly reliable support area. If you're combining this with other things such as the 55-day moving average here combined with the lower Bollinger Band has been a good support level. And then if you're quite an active scalper and you're looking to take profit, then when we hit the upper Bollinger Band, it's a decent enough area to be taking profit and then waiting to get back in on the lower Bollinger Band. One other aspect of the Bollinger Band that is worth mentioning is the bandwidth squeeze. This provides a signal to traders and occurs when narrowing bands show that volatility has fallen to a low level. I'm not a big believer in this, but it's a factor that you need to understand. Periods of low volatility are often followed by periods of high volatility. Well, yes, sometimes. It goes without saying. So therefore, a narrow bandwidth can occur before a significant advance or decline. Well, we kind of got that here with the dollar versus the Canadian. You can see a period of relatively stable sideways action, decreasing volatility, and particularly around April here, the Bollinger Bands really narrow, and that is just before we get some more volatility entering the market. The Bollinger Bands widen out quite quickly here as the market moves. Initially, a good spike up, quite a sharp spike up actually, forces the Bollinger Bands to widen out. They narrow a little bit as the price comes back in a correction, and then as we collapse through to the end of June, and then again collapse again down to the beginning of July, and then beginning of September, you can see the bands really widen out, and you know, useful. They do contain the move. It would make you aware of the fact that we are having some support. I mean, you can see even when the Bollinger Bands widen out and the market does collapse, the price doesn't really move below the lower Bollinger Band, so it gives you some help. And even the middle band here does offer some support resistance, so it's worth taking note if you were looking to sell on the rally here, thinking yep, bear trend, sell the bounce. Well, that certainly would have been a good entry point for a short, wouldn't it, at the upper Bollinger Band. And again, you see that here at the end of September, beginning of October. Now the question is, are we trying to push out higher, which I think we probably are in this pair actually, so the Bollinger Bands might widen out again. I think it's true to say that the approximately 90% of the price action occurs within the two bands, so a breakout above or below the upper or lower band is a major event, and we're certainly trying to have a breakout above here, which might be a very bullish signal at the moment for the dollar versus the Canadian. Worth watching that over the next few days if you're tuning in around the 23rd of October. Okay, so can't really say much more about Bollinger Bands. I think I've explained it. It's not a complex tool to use. It can be useful, but I do think you need to combine it with some of the other tools that I explained in this series.